Welcome back to MarketSnap, your daily rundown of everything that moved the markets. Today was one of those sessions where a single stock stole the show, but the real story was hiding in the broader tape. We've got a lot to unpack, from a massive AI financing deal to a brutal sell-off in a consumer favorite. Let's dive into the numbers and the narratives that shaped Tuesday's trading. The major indices closed the session in the red, but it wasn't a broad-based sell-off. The S&P 500 slipped about 0.33%, while the Nasdaq gave back a bit more, down 0.6%. The Dow also pulled back, but the Russell 2000 managed to eke out a small gain, showing some resilience in small caps. The VIX stayed subdued, suggesting investors weren't panicking, just repositioning. The big story of the day, and the name that absolutely ripped, was Sea Limited. Shares surged over 14% after the company blew past revenue estimates, powered by explosive growth in its e-commerce business, Shopee, and its financial services arm. This is a reminder that in emerging markets, the growth story is still very much alive. We also saw strength in KKR and Apollo, both up over 6%, as the market continues to reward alternative asset managers. Marathon Petroleum and Phillips 66 also had a strong day, riding the wave of higher oil prices. On the flip side, it was a rough day for some high-profile names. Alphabet dropped nearly 4% after raising its 2026 CapEx forecast to as much as $205 billion. Investors are starting to question when all this AI spending will translate into profits. That sentiment hit other tech names too, with Dell and Datadog both down significantly. And in a sign of the times, even SpaceX pulled back nearly 4%, giving back some of its recent gains. The S&P 500's move today was really a tale of two markets. While the index was down, the underlying breadth was interesting. We're seeing a rotation where money is moving out of the mega-cap tech names that have led the rally and into other sectors, which is actually a healthy sign for the long-term bull case. The Nasdaq's underperformance today was directly tied to the weakness in big tech. The AI trade is at a critical juncture. The market is trying to price in massive future growth, but the current earnings and free cash flow aren't quite matching the hype. It's a tug-of-war between long-term believers and short-term pragmatists. Looking at the weekly performance, we see some names that are really finding their footing. Space Exploration Technologies is up over 23% on the week, and Airbnb has rallied 20%. We're also seeing strength in precious metals miners like Newmont and Agnico Eagle, both up over 12% this week, which tells you something about where investors are seeking safety. But the weekly losers list is a who's who of former high flyers. Honeywell Aerospace is down a staggering 25% on the week. AppLovin has lost over 20%, and the memory chip makers are getting hammered, with Western Digital and SanDisk down 19% and 11%, respectively. This is a clear signal that the market is punishing names that were priced for perfection. The most active stocks today tell a similar story. Oracle was down over 3% on heavy volume, continuing its slide, but we also saw AT&T and Nokia buck the trend, both moving higher. It really was a day where you had to be selective. We're in the thick of earnings season, and the calendar is packed. Today after the bell, we're hearing from Cava Group and Lumentum Holdings. But the big one everyone is watching is tomorrow's CPI report, which will be the key catalyst for the Fed's next move. We also have major reports coming from Applied Materials and Cisco later this week, which will give us more insight into the health of the tech trade. You can find exclusive earnings transcript summaries on MarketSnap. From a sector perspective, the rotation was clear. Energy was the standout performer, up over 3% on the day, as geopolitical tensions continue to keep a bid under oil prices. Basic materials also had a solid week, up over 4%. This is classic late-cycle behavior, where money flows into hard assets and away from growth. On the other end of the spectrum, consumer defensive and real estate were the laggards. It's a sign that investors are willing to take on more risk in certain areas, but are also nervous about the consumer's ability to keep spending. The tech sector, despite the AI hype, was actually down on the week, which is a notable shift in sentiment. Beyond the numbers, there were a few major headlines that will have a lasting impact. The biggest one is NVIDIA's new $500 billion compute financing platform, backed by Wall Street's top power brokers. This is a game changer. It essentially securitizes AI infrastructure, turning computing power into a tradable asset class. It's a massive endorsement of the AI build-out, but it also raises questions about risk and leverage in the system. We also saw some other notable moves. On Holding got crushed, down over 20%, after missing sales estimates and tempering its outlook. That's a tough break for a company that was a market darling. And in the world of M&A, Nasdaq announced it's acquiring Level Markets, and there's a big deal brewing in the theater space with Ari Emanuel's group buying ATG Entertainment. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you found this breakdown helpful, make sure to like, subscribe, and hit that notification bell so you never miss a daily recap. And for deeper dives, check out our exclusive SWOT analyses on the stocks we discussed today. We'll see you back here tomorrow for another session.